Hey, puppy trades. I wanted to do a video analysis update of the stock market. I think this video is going to be a lot more low energy than a lot of the videos that I make. I think there may be a few reasons for that. But in this video, I wanted to kind of pose a question. In my last video, I kind of posed the question um, who do we as a society make famous, right? And do we as individuals do we have responsibility for who we make famous, who we support, whose message we share, right? There's a lot of complaints in this country about the officials that we elect, the people who we vote for, what they're responsible for. Very rarely do we look back at the voter. So I wonder sometimes in my last video, are we responsible for the people who we make famous? So I think I want to do that in my videos from now on. My kind of plan right now, you probably noticed, the videos are a little less frequent. I'm planning on making a video for every monthly option expiration, at least. That's my goal. And so between those times, when I'm thinking about, what I'm going to put in the video, a lot of times a question pops up. So for this month's video, and I'm not just saying they're only going to be monthly videos, but for this video, the question was a question that was asked to me by one of my heroes a long time ago. And I don't really have many heroes, but I would say Jordan Maxwell and Santos Bonacci are two of my heroes. They're two people who really changed my life in the best ways possible. Really showed me what's going on in our world. So anyway, I'm gonna take a little sip of a beer right now. I'm drinking a Regal Light, about $1.50, $1.60 Total Wine. Pretty cool. But anyway, Jordan Maxwell asked me a long time ago, how much does it really matter if people know the truth? Which is a interesting question because I think it's almost a rhetorical question, right? Of course, it matters that people know the truth, right? But the way he said it was really compelling. He kind of like paused for a little bit. He was like, "No, but really, how much does it actually matter that people know the truth, right?" And then what he later goes on to say, he says, "If you stand under," he says the word understand. A big thing that these people study that's really important. It's called etymology, the study of where our words come from. One example, apparently, is that in the Hebrew language, the word hell means grave. So Sheol, Sheol, is the word hell in the Hebrew language, and it literally means grave, right? So if someone says, "I'm going to hell," well, they're right. They are going to hell. You're going to the grave. Unless you get cremated, we're all going to the grave, right? So we're all going to hell. And then we're all going to heaven too, right? Look up at the stars, look up in the sky. One day we're all going to be dust, and we're going to rejoin, those little particles in the air that ultimately made us up. But anyway, Jordan Maxwell said, how much does it really matter that people know the truth? And then he also said that the word understand has the etymology of literally standing under a structure. So if you went into a building back in the day, well, you didn't have architects and civil engineers with their fancy stamps of approval like we have today. If you went into a building in old times, you were trusting, or you were either trusting that that building was built well, or you were literally going to go stand under the building and you were going to check out the foundation. Jordan Maxwell said it was really important to understand that the word understand comes from literally standing under a building and checking the foundation to see if you're going to go stand in that building. And that used to be a life or death situation. So Thanksgiving, and what I want to do is actually say that I'm very thankful for Fintwit. I think that might be a little odd, to some of you guys, if you read my tweets, that I'm thankful for Fintwit. I love Fintwit. You might be like, right, what, when? When did that become your view? That's always been my view. So before I get into any of these links, I want to especially say I'm not affiliated with Bar Chart. I'm not affiliated with at all with iVolatility.com. I'm not affiliated with Cheddarflow. I'm not affiliated with Chart School. I'm not affiliated with any of the outside data information links or sources that I go over in any of my videos, especially this one. And I certainly am not expressing their views. I'm expressing my views. I have no affiliation with any of these people. But I would say that these groups are a part of a very important community called Fintwit. I think it's very important for us to realize. So it's easy for us to forget. It's easy for us to forget what we really talk about on Fintwit. Why I really love this community so much. Because if you think about it, we don't talk in society the way we talk on Fintwit. And I'll show you what that means right now. So this is school. This is literally chart school, right? SOXX.com. This is actually technical analysis 101, right? The Wyckoff composite man. So I'm not a Wyckofian, but I'm going to take a little sip of beer. We'll get into what this might mean. If you look at this, it says Wyckoff's composite man, right? Wyckoff proposed a heuristic device to help understand price movements in individual stocks and the market as a whole, which he dubbed the composite man. So before I read some of this, I want you to actually think kind of how radical this is. And remember, a lot of this stuff from a lot of these people, their careers were multiple decades, but a lot of this stuff was in the 1930s. In the 1930s, people are talking like this. I think it's very interesting. The composite man. All the fluctuations in the market and in all the various stocks should be studied as if they were the result of one man's operations. Let us call him the composite man, who in theory sits behind the scenes and manipulates the stocks to your disadvantage if you do not understand the game as he plays it, and to your great profit if you do understand it. That's a radical quote. That's a wild thing to say. I mean, just think about that. All the results should be studied as if they were the result of one man's operations. He sits behind the scenes and manipulates stocks to your disadvantage if you don't understand the game he's playing. What game's being played? I thought we were in a free market. There's a game being played? Did you guys know this? This is Technical Analysis 101. This is Introduction to Wyckoff. There's a game being played. There's someone sitting behind the scenes manipulating stocks. We should act like one person controls the market. I mean, we're seconds into introductory Wyckoff, and we're talking about pretty radical things. Wyckoff advised retail traders to try to play the market game as the composite man played it. In fact, he even claimed that it doesn't matter if market moves are real or artificial. That is the result of actual buying and selling by the public and bona fide investors, or artificial buying and selling by large operators. This is almost 70 years before it was widely known machines had taken over the stock market. And he's talking about artificial buying and selling based on his years of observations of the market activities of large operators, Wyckoff taught that the composite man carefully plans, executes, and concludes his campaigns. Well, we know that. We know that the composite man attracts the public. Whoa. I mean, you can't even get through some of these sentences without thinking about how insanely radical this is. The composite man attracts the public to buy a stock in which he has already accumulated a sizable line of shares by making many transactions involving a large number of shares, in effect advertising his stock by creating the appearance of a broad market. It's almost crazy that YouTube videos don't get taken down for reading stuff like this. It's almost, part of the reason I'm making this video is I'm not sure how much longer we're going to be able to even talk like this on Fintwit. Someone's making the appearance of a broad market. Someone's advertising stocks to retail after they've already accumulated a large number of shares. I mean, we're in introductory technical analysis right now, and a lot of people think this stuff is impossible or this stuff is voodoo, right? One must study individual stock charts with the purpose of judging the behavior of the stock and the motives of those large operators who dominate it. With study and practice, one can acquire the ability to interpret the motives behind the action that a chart portrays. Wyckoff and his associates believe that if one could understand the market behavior of the composite man, one could identify many trading and investment opportunities early enough to profit from them. So we're already talking about stocks being manipulated, the public having stocks advertised to them. There's a game being played. There's someone sitting behind the scenes. I mean, this is wild. Do other facets of our society talk like this? I don't know. I don't think they do. Let's look at some W.D. Gann quotes. W.D. Gann quotes are pretty interesting. I'm definitely not a Wyckofian or a W.D. Gann trader, but some of these quotes are pretty interesting. There are many examples of Mr. Gann's use and interest in astrology. However, I think one needs to know I think that one needs to view astrology the way that Gann himself did, as a supplement to greater laws and techniques. So this is another member of the technical analysis Mount Rushmore. Let's just read a little bit about what W.D. Gann thought in an obscure this is 1919. This is over 100 years ago. In an obscure 1919 interview, W.D. Gann had this to say on the subject: an astronomer can predict to the minute when an eclipse is going to occur. But you would not consider him a prophet, would you? Of course not. He simply makes use of mathematics based on known laws of movements of the planets in their orbits. I found in my research that the Chinese understood all these laws and computed the coming of eclipses thousands of years before the Egyptians and Chaldeans. It is marvelous the knowledge that these ancients had. In making my predictions, I use geometry and mathematics just as an astronomer does, based on immutable laws which I have discovered, that there is nothing supernatural or weird about it. That's a very interesting quote. We're talking about one of the Mount Rushmore fathers of technical analysis. One of the reasons Fintwit probably exists in the first place, saying that he used geometry and mathematics just like an astronomer. Imagine if someone tweeted that on Fintwit. I'm actually going to be using mathematics and geometry and astronomy, and there's nothing weird about that. Well, I think a lot of people think that there's a little bit of weirdness about that. We have a little more astrology, and I'm definitely not an astrologer, but JP Morgan, apparently, he's a pretty big influence in the Fintwit finance community. We're going to talk about Mr. Morgan's stock in this video, but JP Morgan in astrology, the statement that millionaires don't use astrology, billionaires do, is attributed to JP Morgan. It's repeated all the time. blah, 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 blah. Omar's source material may have been from Evangeline Adams' 1926 autobiography, The Bowl of Heaven, where she tells us that I do know about the late J.P. Morgan's belief in astrology because, well, I taught it to him. I read his horoscope many times and furnished him, during the last years of his life, a regular service explaining the changing position of the planets and their probable effect on politics, business, and the stock market. No further proof of his interest in the science is required, beyond the fact that he renewed this service from year to year. So, a little interesting, he has this famous statement: millionaires don't use astrology, billionaires do. He seems to be attributing a lot of his financial success to a study of astrology in a similar way that W.D. Gann almost attributed a little bit of that. And it's known that he was very interested in this subject. So am I an astrologer? Am I a Gann person? Am I a Wyckofian? Absolutely not. Right, but I love Fintwit because we can talk about this stuff that's radical. I mean, this is radical stuff. And so this is the biggest one. I really need to say, hey, I am not affiliated with Cheddarflow, but they have really contributed to Fintwit. And one of their slogans, it appears, I'm not going to say this is their official slogan, but one of their little tags they've created, or that's become popular for their followers at least, is someone new. So if you search Cheddarflow, someone new, you'll see exactly what I'm talking about. We can just go read a few of these from Cheddarflow on Fintwit. We've got about 133,000 followers on this account. Just in Apple to slow hiring and spending for some teams in 2023. It's like someone knew right before the headline was posted, and they posted a link to what they presumably saw was a large order flow for puts coming in on Apple. We see a lot of these are sweep orders, which often means that that's going to be at as high as the ask price, though they don't even really care if they're getting a good fill. So some, I'm not an expert in analyzing large orders in the options market, but this is a very common thing. Someone knew something. More Cheddarflow information. Prints always come first. This is from I Love Stocks One. Nice gains. You've been on this for weeks. Congrats, Cheddarflow. Thanks for the data. I should have gone long on it. So this one, he tweeted on August 8th about Disney. Interesting print, courtesy of Cheddarflow. I want to see if this can break 111 for some action. It looks like 3 days later, that move he was looking for ended up playing out. I mean, it's all over this, right? Someone knew, and this is just a common thing for us to talk about on Fintwit. Hey, someone knew something. Someone knew something, and that's rare. I think that it's important for us to stand back and say this is unusual. We don't do this in other corners of our society, right? So I'm going to return to the Jordan Maxwell quote. How important is it really? How important is it really that people know the truth? And I think that there might be a little more important thing to add to that. How important is it that people are exposed or can be exposed to opinions that are radically different than theirs, even if they're not 100% guaranteed to be factually what happened, right? Do people deserve that? Should we be able to hear other people's perspectives? One of my favorite quotes is that the hallmark of intelligence is being able to hear someone else's radically different opinion than yours, disagree with it, but still have a continued relationship with that person. I certainly agree. So if you don't mind, I'm going to tell you guys what I think actually happened to a couple stocks, and they're stocks that affected our society. And it's weird because if this was a tech stock before they made a announcement about their guidance, we'd say someone knew, duh, right? The MMs were screwing with retail. right? But for some reason with these stocks, when it affects the world the way it does, it's a lot harder for us to say someone new. Well, unfortunately, I kind of have made a little habit of talking about things before they happen. I am absolutely not saying that I'm perfect, that all my predictions, are spot on, and that they're on a long list of, stocks I've been quote unquote wrong about. Interesting that a lot of those were long-term ideas. But anyway, we're going to go over a few of these, and I'm just going to tell you what I think actually happened. So let's just get right into it. This is Pfizer. This is PFE. What happened to Pfizer? Well, it's interesting. Most people know exactly what happened to Pfizer, right? You can ask anyone. What happened to PFE? What happened to PFE stock in 2021, 2022? Why'd it go from the mid 30s to 60? You can ask people that. You can ask anyone that. Everyone will tell you the exact same thing. And I don't even need to repeat it. You know what the explanation is, right? I know what the explanation is. What I'm going to show is that there may have been a little different explanation that I think some people are worried about. So this was my Elliott Wave view of Pfizer, that we had a multiple year nest breakout. So all a nest is in Elliott Wave theory is a large wave 1 and a large wave 2, and then on a smaller degree, another wave 1 and another wave 2. So we had this March 2020 low hold for Pfizer. This was going to be 5 waves up, 3 waves back, and we were going to be looking for the length of this rally placed at this low to give an equal legs target for wave 3 of about 60. So fortunately that played out. I was able to make well over a 1,000% return trading Pfizer options in 2021. Probably what I would consider my big break, at the very least, an epiphany of what's really going on in the options market, what's really going on in the stock market. I saw this. Pfizer was on the top 200 volume and open interest in March of 2021. I kind of talked about in my last video how I bought lots of calls and puts at a ratio, about 2 calls for every 1 put. And then I realized kind of halfway through the trade that I didn't even really need to be picking a bias, that the gamma was so high, the theta was so low for the particular characteristics of Pfizer, that I could have taken a delta neutral trade, a directionless trade, and made a good amount of money, right? So it's important to remember that Pfizer is paying a nice little dividend, especially at this time. I think it was yielding close to 3 or 4%. So if institutions have straddles, then they can have at certain times, whenever Pfizer has a correction, they have in-the-money puts on Pfizer, and they can buy shares of Pfizer against those in-the-money puts that are considered to be risk-free, because a put can be exercised. So once a put has a delta of 100, or I should say a delta of negative 100, it's the equivalent of being short 100 shares. And so for me, if I had a put on Pfizer with delta of negative 100, I would need to buy 100 shares of Pfizer to offset that put, right? Otherwise, if I only bought 95 shares, I would be in a net bearish position still. So the idea is that if the institution buys a straddle on Pfizer when it's at, say, 37, and then it falls to 33, they can buy shares of Pfizer against that in-the-money put for the 37 strike when Pfizer's at 33, because that put's going to have a really high delta. If the delta was, say, negative 85, the institutions could have bought 85 shares of Pfizer that are considered risk-free. The reason they're considered risk-free is because if Pfizer recovers, the gamma is going to kick back in, and the delta of the put is going to become smaller and smaller, where the shareholder still bought 80-ish, I forgot what it was, but 80-something shares. The put's going to get smaller and smaller. And so as Pfizer recovers, it's going to become a net bullish position.
And if Pfizer kept dropping, the gamma continues to kick back in. The put becomes stronger and stronger, but the shareholder only bought 85 shares. They're still collecting a dividend that was quote unquote risk free, and they're actually still even in a bearish position on Pfizer, benefiting to the downside. So that's the general idea of a gamma scalp. I believe that's what happened in 2021. And it's okay if you disagree with that. It's okay if you think that's false. I just want you to know that's my perspective. That's what I think happened, and it's okay if you disagree with that. If you disagree with that one, what we're about to go over with oil could be hard for some people. It could. It's going to be hard for a lot of people to accept. Most people won't accept this, um, but I think it's important. So we're going to talk about it. I've talked so many times in so many videos about a picture from November 11th of 2021 where Chevron, ET, and I think Royal Dutch Shell and BP were on the screener that I'm about to go over. For the sake of everyone's sanity, including mine, I'm not going to show that picture again. I actually have others, so we're going to go over a couple of them. I do have to kind of, toot my own little horn a little bit. Again, I'm wrong about plenty of these. That's not really the point. The point is that a lot of these are kind of uncanny. I'm just trying to show you how some of the uncanny predictions are made, right? And if your response to that is, well, some of your, projections stop out, like, I understand why you think that. It's because if you actually thought about what was really going on in these projections, if you really thought about the implications of this, your reality would crumble. You'd realize that everything you've dedicated your life to is fake, right? So what's going on here? This is January 3rd. If you know anything about Elliott wave theory, or you follow my work, it doesn't really get much more explosive than this. This is 1, 2, 3, 4, 5 waves up, labeled as a large wave 1, and this is a large wave 2. From this low, I have labeled another wave 1 and another wave 2. So I have a projection right here that Oxy is going to begin wave 3 of wave 3. So we know that Oxy did end up doubling from this point. Why did I tweet about Oxy on January 3rd? Well, because on January 3rd, Oxy and BP and ET appeared on my favorite screener. They appeared on this screener and as value stocks, especially with a lot of these in the oil sector paying dividends. I knew they were using straddles to get these dividends risk-free. And once Oxy was, on the top of these screeners, I think it was on the bar chart straddle screener a lot too. I knew that the jig was up. The MMs were about to play Yahtzee with Oxy. Anyway, that's just one example for Oxy. Here's another one from ZOM. I think I had XLE too. I think, by the way, this Oxy post was quoting my post on XLE. So my post about XLE, I projected that it was going to enter a wave 3. My targets were 68 and 76. The reason I was posting about XLE December 20th-ish was because XLE and Oxy and Cleveland Cliffs were on the screener. Thought that was good evidence. They had a jig going for the value sector, particularly the oil sector. So what happened right before kind of these December screener readings? And remember, I also said there was a November-ish, mid-November screener reading where we had Chevron, we had ET, we had Royal Dutch Shell. Right, we all know the official stories. Right, we all know the official series of events that just happened to take place. For oil, most people can recite them. So I'm just going to tell you what I think happened. I think that in mid-November, the institutions bought tons and tons of straddles on Chevron, ET, Royal Dutch Shell, and BP. They entered delta neutral positions. What I then think happened is that when there was a scary correction, that in the words of Wyckoff was maybe advertised to retail as a reason why we were going to have an economic shutdown, a reason why we were about to crash, right? Get out of oil. Oil was about to go negative again. During that time, the institutions were very lucky. They got to have lots of in-the-money puts from the straddles they bought, so they could buy shares of the oil sector risk-free based on the delta equivalency principle that I described with Pfizer. So What we see is that they have all of December 2021 to buy shares of Oxy, buy shares of XLE, buy shares of ExxonMobil and Chevron, and then they get very lucky. We have all these crazy CPI readings, this wild series of geopolitical events, right? And Fintwit's kind of the only place where you maybe could say, "Hey, wait a minute. Didn't Wyckoff say something about what happens before stocks have big moves? That there is a carefully planned and executed campaign? Is it too much to extrapolate that 70 or 80 years later, after Wyckoff said this, that campaign would involve stock options and the media? I don't think so. I don't think that's too crazy to think. But anyway, that's just what I think happened, right? It could be incorrect. It could be false, right? The video could get taken down. Those are all possibilities. What I want you to ask is, do you think maybe people in Ukraine deserve to hear that someone thinks that maybe something a little different happened in their country than the exact story that they're being told, right? Do you think maybe a lot of the people who were, scared to death, threatened with their livelihoods, do you think even if you don't agree with what I think might have happened, do you think they deserve to know what may have happened, or what some person, even if you think they're a crazy person, thinks could have happened? And then maybe they should see some of this evidence, because it's weird when we have something happen in the stock market. Everyone tweets, "Oh yeah, the MMs knew they scammed retail. They did this. They did that. They tricked retail." They read all this Wyckoff stuff. "Oh yeah, they executed a campaign, right? They fooled retail. They stopped them out." But then when it's a touchy subject, we don't really like to remember Wyckoff then, right? We don't really like to remember the MMs when this happens, do we? No, it's a little tough to say, "Hey, wait a minute. Remember those campaigns that we study, right? Remember remember that?" No, we don't like to remember that, but that's okay. I think we'll remember it soon. Here is the S&P 500. I believe it formed a 1, 2, 3, 4, 5 ways up. Before I get into SPY, I was really hoping I would get to raise the strike prices on some of my straddles before I made this video. Unfortunately, we got a pretty muted 2 or 3 weeks, and so my straddles honestly have not changed enough for me to update them. So if I do make any changes, I'm trying to raise the strike prices on the straddles that I went over in my last video. But really, I haven't changed much. Not enough to update. I'm looking to buy the AG&C 10 strike straddle that expires in June, or the one that expires in January of 2024. I like a couple of straddles. I'm trying to buy the Barclays straddle BCS. I'm trying to buy a straddle on that stock. I want to buy the 8 strike straddle that expires in in January of 2024 if I can. And I want to buy a straddle on Vodafone. Right now it's at about 12. I want to buy the 10 strike or the 13 strike straddle on Vodafone that expires in 2024 January as well. For growth, I still have my straddles on the Metaverse ETF and bets. I honestly like, for growth, the Metaverse ETF. I like straddling that a lot. So I've got a couple straddles on the Metaverse ETF. And for growth, it might be a little risky, but I'm thinking about buying that 16 strike straddle on bets BETZ that expires in July. But really, nothing's changed from a straddle perspective. Here is the S&P. I think it formed a wave 1 and a wave 2 from this low. I've gone over what the bears think, but it's pretty clear right now for the bulls. They're going to say we ended wave 2 at 348. So this is wave 1. This is wave 2 at the 50% fib. So we have, ideally an impulsive structure up, 50% retracement, another 5 waves up, is going to be expected for the S&P. There are a lot cleaner charts in the market than this. There are a lot clearer, better charts in the market than this, but this is the S&P. I think this is wave 1 and wave 2. We ended wave 2 at the 50% fib. The length of wave 1 placed at the wave 2 low gives an equal legs target for the S&P of about 600. Now, we're not there yet, right? Bulls can't. I'm drinking a Regal Light now, but pretty soon it's not going to be 4 or 5%, because we got the healthcare sector right now about 6% from all-time highs. XLV, we got XLI, the industrial is not too far from all-time highs either. And if you know where to look, there's some stocks that are already at all-time highs. Enphase Energy and First Solar, we're going to go over in this list that would fit that description. Obviously, FSLR is at an all-time high, but, no need to be nitpicky. That's a 15 or 20-year high that we see Enphase and FSLR in. Doesn't guarantee anything, but, we do have some stocks at all-time highs. I think pretty soon we'll see XLV and XLI will have whole sectors that are within the S&P at all-time highs. Why does that matter? Well, from an Elliott Wave perspective, the people who are going to say that for SPY, we had what the bears are going to say in the short term for SPY, that this is all wave A. So they're going to call for this wave B to end indefinitely, right? They'll probably get it all the way up to there. They'll still be calling it for a wave B. So they're going to look for a wave C down. The reason it's important that XLV and XLI are about to make new highs is because if XLV and XLI have already broken this high, then they're going to have already invalidated this, unless, of course, the bears just keep calling for an expanded flat, which they will. Anyway, that's why it's going to be a little important. Be cool if it happened next week. I don't really care when it happens, but I do think a new all-time high for XLV and XLI. I mean, bulls are going to be they're going to be having fun if that happens responsibly. Here is Apple. I think this is a wave 1 and a wave 2 at the 61.8 to 78.6% fib from this September 2020 low. So I think this is wave 1 and wave 2. I think from this low we formed another wave 1 and another wave 2. It's a little tight, not too tight actually. I like this. If we're above 129, it's very clear for Apple. The bulls are going to say that's wave 1, that's wave 2. So they're going to look for a big old wave 3 to take Apple to all-time highs. Pretty simple for Apple there. AMD, Advanced Micro Devices. By the way, we have lost a low for Tesla, so I would say these charts very important for Tesla in the semi-related sector. I think this is 1, 2, 3, 4, 5 waves up for AMD. This is an ABC correction at the 61.8% retracement. We see the length of wave A placed to the wave B high appears to be around where wave C ends. So I think this is wave 1 and wave 2. 5 waves up, 3 waves back. So bulls are going to look for 5 waves up. 36 is way too wide of an invalidation right now. Really, that was kind of a pick the low. You had to be there, one of them. But I think 54, not bad risk reward. But I think maybe Apple and some of the other charts we're going to go over in the tech section might be more useful downside levels for AMD. 54 is nice. It's basically, hey, that's the low, which sometimes trading is, hey, that's the low. We're going to go break a high. And sometimes those are the most successful trades, to be honest. Anyway, here's Nvidia. It's just, it gets prettier and prettier every day. This is a 1, 2, 3, 4, 5 waves up for Nvidia. Another one where the institutions were literally caught using straddles. Doesn't matter. It's interesting for Nvidia on all of these. It was like, oh yeah, of course the MM's new. Of course the MM's new. Of course the MM's new. It's like, whenever it's not like a geopolitical event, it's the MM's new, right? Whenever it's like a company specific thing, or like, oh, like someone knew they were going to raise their guidance, right? Then it's always the MM's new. It's easy for us to say, oh yeah, the MM's new. But when it's a geopolitical thing, it's like, oh, wait a minute. we're gonna forget all that MM stuff we talk about. 1, 2, 3, 4, 5 waves up for Nvidia, an ABC correction at the 61.8% retracement. 98's the true invalidation. I think bulls will also be interested that 108 holds that wave too low. Just like AMD, they're going to look for the big old fun wave 3 that would say a break to a new all-time high would be the minimum expectation. SOXX, very similar idea, very pretty idea. Wave 1 and wave 2 from the 2018 low. Big wave 3 and an ABC wave 4 correction at the 61.8% retracement. I think 269 is a great level to be above. 251 is a stupid invalidation at this level. But 269 is nice. It might be another one where they're looking for 287 to not get broken too, just because the risk reward to the downside. The further we get from these lows, the more useful that low is going to be to say, hey, actually that is a low, and we're going to hold it, and then that's the risk reward. Above it, wave 1, wave 2, wave 3, and ABC correction wave 4. Minimum expectation for the bulls is that we're going to go make a new high. For wave 5, the equal legs target, if we do get going, the length of wave 3 placed at the wave 4 low. That could take SOXX into the 670s with AMD and Nvidia. Here are some banks. All of a sudden, the banks aren't boring. Isn't that interesting? I love that. Oh man, we're not talking about those boring banks anymore. They're the fun banks now. 1, 2, 3, 4, 5 waves up. And JP Morgan, he didn't know Elliott Wave, but he did know astrology. I think some people believe there's a little connection there. I'm not into astrology. Don't worry. I mean, I don't think astrology's bad. I'm a Virgo, but that explains a lot of my personality apparently. But anyway, 1, 2, 3, 4, 5 waves up. ABC correction between the 61.8 to 78.6% fib. I mean, it doesn't get prettier than this. I mean, if we're above 101, wave 2 ended. That was 5 waves up. This is 3 waves back, and that was a 4% dividend yield on what's probably going to be appreciating shareholdings on the largest financial institution in the world, possibly. I know they all have different titles, right? One's the largest this, the other's the largest that, but come on, man. It's JP Morgan. It's JP Morgan, man. It's going to be obvious in hindsight. Anyway, whatever. Here is Wells Fargo. Wells Fargo's a pretty one. I like this 10-year view right here of Wells Fargo. 1, 2, 3, 4, 5 waves up. Large degree wave 1. All right, this is a 10 years in the making wave 1 from this 2008 low. Wave 1, wave 2, another wave 1, another wave 2. So bulls will look for a wave 3 of wave 3 to enter. They'll say 36 is going to hold as the low. I think 35 is a little more useful, but that's splitting hairs. That equal legs target for wave 3, the length of wave 1 placed at the wave 2 low. That can take Wells Fargo up to 76. Here is SBUX. SBUX is looking like it's going to make me a little bit of SBUX. I think this is 1, 2, 3, 4, 5 waves up. An ABC correction wave 2 at the 61.8 to 78.6% fib. I'm going to hold this like I'm on a road trip. But I think this is 1, 2, 3, 4, 5 waves up. And I think that's wave 1 and wave 2. I'm looking for SBUX to hit wave 3, continue paying a growing dividend. And sleep well at night knowing that the MMs, they already managed risk with straddles, but now they're compounding this delta to the upside. The length of wave 1 placed at the wave 2 low gives an equal legs target of 144. Ask the Elliott Wave Bears are going to give you a really, really funny explanation for this. I shouldn't say it's funny because that's how I'm going to jinx myself. They're going to say that's wave A, this is wave B, and we're going to go have a wave C that's the length of this rally placed at this low. The entire length of this drop placed at this high, which would take Starbucks stupidly low. It's interesting that Starbucks would have a pretty crazy yield if that happened. But anyway, that's kind of the silly wave C view. I shouldn't call it silly, but it's just it's an interesting target that the bears are going to have to come up with for Starbucks, especially if we have XLV and XLI in the market at all-time highs. 1, 2, 3, 4, 5 waves up. Wave 1, wave 2, the wave 3 equal legs target is 144. I can go further than that. And I plan to hold it for further than that beyond then. Here is Verizon. So I've covered my straddle on AT&T basically for about $300-ish. I've got that June straddle, June 16th, if there's a gun to my head. That is the 19 strike on AT&T. That's basically a pair trade on Verizon. delta neutral trade. Pair trade is just the fancy way of saying that I'm understanding as an investor that AT&T and Verizon aren't guaranteed to move together, but they're probably going to move together in the 5G sector. I think this is wave one and an ABC wave two for Verizon. So if I anchor this pitchfork from the all-time low, I take the beginning of wave one, connect with the high of wave one and the low of wave two. I think this is another wave one and another wave two. So we can see a wave three of wave three begin for Verizon. That long-term target is 73. I'm managing downside risk with straddles, but 31.45. I love that 78.6% fib as a stop for especially a value stocks. Wave to a little lower beta. Might be a time for a sip of Regal Light for Boeing, but anyway, Boeing in this industrial sector, I like. I know I'm the boy who cried Boeing, but it is a monopoly. And it's not a monopoly. All right, it's not a monopoly. It's not a monopoly. That's fair. But it is an industrial. I think this is 1, 2, 3, 4, 5 waves up for Boeing. And this is an ABC correction that ended wave 2. I don't have waves A, B, and C labeled, but in the big picture, interesting little tidbit. I can't tell this to my broker. But one reason that I'm looking for Boeing to make a new all-time high is because if we look at the RSI right here, you can see this is the highest. This high right here is the highest monthly RSI reading that Boeing's ever had. From an Elliott wave perspective, there's a rule that says wave 5 must end with momentum divergence. What that suggests, based on this chart, is that this is not a large wave 5. In my opinion, I think this is a large wave 1. And this is a wave 2. So we're going to see, basically all that means is it's the sort of evidence that we're going to see Boeing go break this high at some point in the future. All right. Now, once again, I can't tell my broker that because we made a new high on the RSI that Boeing's going to go guaranteed to break 447 at some point in the future. But that's why it's called Elliott wave theory. Not Elliott wave all in. I think this is a wave 1 and a wave 2 from this low at the 78.6% fib. I see Boeing enter wave 3 of wave 3. I think we're already seeing Boeing enter wave 3 of wave 3. If I was a gambling man, this is a wave 1 and a wave 2 from this low as well. Now Boeing's going to enter wave 3 of wave 3. That 161.8% fib, it sounds silly. And there probably is a shorter, more shallow target around just above 300. I think 397 is that textbook wave 3 target, the 161.8% extension. Let's talk about Disney. Disney is a large wave 1 on the all-time chart. I believe that large wave 1 ended in December 2019, January 2019. Massive wave 2 in 2020, and then I think from this low another wave 1 and another wave 2 at the 78.6% fib. We haven't broken 79. We've done everything but break 79. That is the invalidation to say wave 2 already ended in the long term. I think this is a wave 1 and a wave 2, and we're going to see Disney enter wave 3 of wave 3. Right now, all that really matters is that that's going to, at the very least, entail a break above 203. I think that ultimately is going to be followed by much more upside, even to the 300s for a large degree wave 3. Here is Simon Property Group. I own Simon Property Group. I'm using straddles on AG&C to manage downside risk in real estate. This is 1, 2, 3, 4, 5 waves up for SPG, and I think this is wave 2 at the 61.8% fib. Another example of that RSI rule on the weekly chart. It takes a little bit of getting used to see it, but this is 1, 2, 3, 4, 5 waves up. And when we look at this wave right here, we see from this low, this is the highest weekly RSI reading. What that suggests is that this is not all a large wave 5, because wave 5 must end with momentum divergence per Elliott wave theory. So I think this is a wave 1 and a wave 2. The 61.8% retracement, the length of wave 1 placed at the wave 2 low can take SPG on an equal legs wave 3 target up towards 214, paying a growing dividend along the way. Here is Ford, important chart, I think, for the auto sector, for the EV sector. 1, 2, 3, 4, 5 waves up for Ford. Another one where from this low we see a new high on the weekly RSI. So I think this is 1, 2, 3, 4, 5 waves up. And a wave 2 at the 61.8% retracement, the length of wave 1 placed at the wave 2 low can take Ford on an equal legs rally in the big picture up to 30 even. So A nice stop is 10.61. That's going to say wave 2's already ended. The true invalidation is 8.65. That is too wide from 14. Ford's on all those screeners right now, by the way. All those screeners that I talked about at the end of the video. The MMs have a big party plan for Ford. My guess is it's to the upside, but they're playing it delta neutral. That's how confident they are there's going to be a big move. Here is a Camping World chart. This is, I believe, an IPO base. Just because the stock breaks the IPO low doesn't mean it's in a bear forever. A lot of the biggest growth winners will break that IPO low. I think this is a wave 1 and a wave 2 for Camping World, and from this low, another wave 1 that broke that wave 1's high. Now I think this is an ABC correction that ended wave 2 at the 61.8% retracement. The length of wave 1 placed at the wave 2 low. Says Camping World won't just pay a nice dividend. It could enter a wave 3 above 20.85. The length of wave 1 placed at the wave 2 low could take it all the way in the big picture to the 60s, which is where I'm planning on holding it. Tesla, I think that I meant to update this chart a little more before I started to make this video, and that was my mistake that I did not. But we did see an important low break for Tesla, so I'll just try to update this live. Doing the Tesla chart live, interesting decision, but I'm going to do it. So we did break this low. I don't think that Tesla can be analyzed in a vacuum. I've been covering Tesla for a little bit, and I've never analyzed it in a vacuum. So I think the semiconductor charts that I went over at the beginning of this video are super duper, super important. I think SPY, and I talk about the Qs, but SOXX is basically the same as the Qs. Very, very important charts for Tesla. Let me just make sure I have these levels. 233.33. Okay, so here is what could be happening to Tesla. So is Tesla done, right? Is it gonna crash? Well, that's what the bears are gonna say. All right, so what are the bears gonna say, and do they have a point? Well, if I am quote unquote correct about the semiconductor sector, and if I'm quote unquote correct about the auto sector and a lot of the growth stocks, then Tesla's certainly not done. Tesla's certainly not done. If I'm correct, which I have been, about a lot of the clean energy sector, Tesla's not done. If Tesla was trading in a vacuum, what are the bears going to say? Well, what the bears are going to say, essentially, is that what I'm calling a small degree wave 4 low right here. They're going to say that this low that Tesla just broke is basically the exact same thing that happened to PayPal in 2021 and Square Cash in 2021, and a lot of those growth stocks where this kind of March to May-ish low gets broken, and then they're going to look for basically what happened to Tesla. Basically what happened to a lot of these e-cash stocks like Shopify. The bears are going to say this is about to happen to Tesla. I mean, that's just what the bears think. What I know factually is that if I go to the options screener and I look at the long straddle and the long strangle screener, as I've done obviously every day for the past 2 years, but specifically with Tesla for the past few months, there is literal evidence that just as in this range before these rallies, the institutions were using lots of delta neutral straddles on Tesla and accumulating an awful lot of them in this kind of 300-ish range. So what does that mean? Well, obviously, retail just lost a pretty important stop, right? So retail just lost a pretty important stop below this low, right? At the same time, the institutions, now they have a bunch of puts on Tesla from all the straddles and strangles they accumulated that are in the money. So what's most likely going to happen is that the institutions are going to keep accumulating shares of Tesla risk-free while retail stops out. What I'm ultimately expecting is that a massive wave 3 is going to develop. So there's a few ways for an Elliott wave theorist to go about this that don't involve options. And I don't think any of them are as good as what I plan to do with growth, which is use straddles on the metaverse ETF and use straddles on the gambling sector BETZ, as well as the kind of market in general to manage downside risk. So that's what I'm doing. I really like, right now the metaverse is right around 8. I like that kind of metaverse 8 straddle for May. And I own a couple of straddles on the metaverse. But if we look at Tesla in a vacuum, no options considered, no knowledge of the bar chart, straddle and strangle considered, no knowledge of the semiconductor stocks or all of the other XLY charts that are looking pretty damn good, in my opinion. What could we say here from an Elliott Wave perspective? There's a few things. What I believe happened is that this is 1, 2, 3, 4, 5 waves up. So this is all a large wave one. Well, the bears are going to say that that's actually bearish because for a high beta stock like Tesla, a lot of times wave 2 can end between the 61.8 to 78.6% fib. And we can see that 78.6% fib is all the way down at 97. So Tesla has broken the stop that I posted. It did not form a small wave 1 and a wave 2 from this low, but I don't think it's done. What some Elliott Wave theorists will do is they will say normally wave C does not go past the 161.8% extension of wave A. That's what some Elliott Wave theorists will do whenever they have kind of something where they're more focused on the ABC correction than they are the impulse that preceded it. They'll try to measure this ABC correction. And in the same way I'm looking for a wave 3 to hit the 161.8% extension, they're looking for a wave C to not pass the 161.8% extension. So they'll say this is wave A, this is wave B. The 161.8% extension to the 100% extension of wave A gives a zone that starts around 202 and ends around 121. So that's still a little wide. But 121 might be a little closer of a level. 165 is the 61.8% retracement of this rally from 11.80 to 390. This rally from 11.80 to 414. What the bears are going to say basically is that Elliott Wave bulls are now in a position where they just keep lowering the stop. Essentially what happened to PayPal and Square Cash, essentially, and that's why retail traders miss, big winners because they're worried about being wrong. They don't really actually follow any risk management principles at all, like acknowledging the fact that Tesla's beta is 1.97. That means Tesla is basically twice as volatile as the S&P. That means if I'm investing in Tesla, I'm going to take half the position size that I would in a stock or an ETF that is, tracking the market more, closely, right? So this is twice as much juice, most likely, than I'm going to get from the S&P, right? So that means that I'm going to manage risk with half of the position size. And I also have covered the straddles that I'm going to use copiously. To some people, that just doesn't matter, right? It's more about bag holder this, bag holder that. It doesn't even matter that Tesla's, more than doubled from this, more than doubled from that. Just like it didn't matter that PayPal and Square Cash and Bitcoin and Ethereum, had all well more than doubled before they broke certain stops in 2021. And why is that, right? Why do so many people, join a trading community and then just ignore the risk management, ignore the straddles, ignore, a lot of the stuff that we know actually kind of does matter? It's because of this. It's because if they didn't have, some of the growth stocks that broke those 2021 lows, how would they mentally cope with these predictions where Pfizer is doing exactly what I say, hitting the target to the T, and I'm even, participating in it, making over 1,000% return, right? Their cognitive dissonance would collapse. So they need me to be wrong about, growth. That's why they have these kind of disproportionately kind of very one-sided view of my work. They don't want to acknowledge the oil stocks. They don't want to acknowledge the crypto in 2020. They don't want to acknowledge the big tech in 2021, because if they did, they would realize that all the time they spend on Bloomberg and Fox Business and CNBC, they're being lied to and tricked and manipulated. It was all a waste of time, and they're not ready to admit that. So I'm comfortable with that. I accept that. I understand some people, it doesn't matter how many stocks do exactly what I say, and that's okay. That doesn't bother me at all. I think Tesla 121 is a little wide, 165 is a little tight. I'm managing downside risk and growth with straddles on the Metaverse ETF and bets. But I think shorting Tesla won't go well. So there's my analysis. My unprofessional analysis, by the way, that shorting Tesla will not go well at all. Anyway, here is First Solar. I thought this was going to be evidence for Tesla. Tesla said, screw you, puppy trades. Correlation analysis is for suckers. So I've been told that a couple times this year, actually. I think Oil told me that in the beginning of the year. This is a wave 1 and a wave 2 for FSLR. This is another wave 1 and another wave 2. And if you've been listening to this channel, this is another wave 1 and another wave 2. And I talked for over a year, from May 2020. I literally talked about this for over a year, that First Solar was going to enter this big wave 3 of wave 3, and it did take a year. They did break an important stop. They did bag holder. I mean, it wasn't easy. None of these are easy. But what is this? This is First Solar confirming it's within a wave 3 of wave 3. It's confirming it's exploded out of a multi-decade base. It's confirming that this is a new high on the monthly RSI, and this is a wave 3 of wave 3 of wave 3 in progress. I mean, this was huge. This was possibly AMD or an Nvidia in the early 2010s. Well, the question I asked myself is, was it worth it? Maybe not. I don't know. Anyway, that's First Solar. Here's Enphase Energy. Yeah, I mean, yeah, that it happened. So that worked out. So that's Enphase Energy. Right. Here's Neo. Neo, I think, right, for every Enphase Energy, for every First Solar, there's a Neo. But I think that Neo's got a lot more in common with First Solar and Enphase Energy than we think. I think this is a wave 1 and a wave 2. I think this is another wave 1 and an ABC wave 2 at the 78.6% fib. The length of wave 1 places the wave 2 low. It gives a goofy, it's 74. It's gonna, 600, 700%. I get it. I think the institutions have been using straddles on Neo since the 30s. They get to buy shares of Neo risk-free, and now they're kind of locking in Neo right around, I think, this 10 level. They're buying the 10 strike straddle for this kind of big reversal for wave 3 that I expect. So is Chinese growth going to trade with growth in America? I don't know, but we're seeing a lot of these big wave 3 potentials play out. Not necessarily play out, but start to play out, start to set up in growth. This is wave 1 and wave 2 for Neo at the 78.6% fib. I do think institutions are using the 10 strike straddle right now to play Neo. I think they used the 30 strike straddle so that when this low broke, instead of stopping out and bag holder, they got to buy shares of Neo risk free. Well, I was called a bag holder, which I was for XPEV and Lee and Alibaba, but I took smaller position sizes in them, had straddles, had lots of covered call ETFs. It matters to my P&L, and that's actually been doing very well, even though we're not, in the most bullish year. But that's what's interesting is the more you care about being called right and wrong on the internet, the worse your P&L does. And the less you care about that, the better the P&L does. It's a very interesting dichotomy, one that I've really benefited from recently. I'll tell you what, man, those covered call ETFs they cover up a lot of bad, man. Oh, man. RYLD, QYLD, QYLG, JEPI, XYLG, XYLD, a lot of the dividend holdings I have, those Those payments every month cover up a lot of bad, man. I'm blessed to live in a state that doesn't have a very high tax rate. So after tax season, I'm gonna show you guys what's going on there. I'm very happy about that. I'm using straddles to ideally build a system that's entirely directionless. It's not really even based on predictions at all, which is, I think, the way it should be. That someone, is primarily doing it all quantitatively, and then that frees up the true technical analysis, which is the art. I think this is wave 1 and wave 2 for NetEase. I think this is another wave 1 and an ABC wave 2. I mean, this is NetEase. This is a multi-year wave 1, wave 2, another wave 1, another wave 2. If NetEase enters wave 3 of wave 3, it'll all be worth it. It'll all be worth it. It'll all be worth it. But at least to me, it would all be worth it. But to some people I know, it's not. That's what's crazy. I know to some people it's not. Catching the length of wave 1 places the wave 2 low for a minimum wave 3 target that ultimately could take, in the medium term, possibly NetEase to 150, and in the big picture, into the low 200s for what I would believe would just be this black wave 3 target. To a lot of people, getting called a bag holder literally isn't worth that. It isn't. That's one of the advantages I have. I had a girl ask me recently if I was embarrassed, if I could be embarrassed, and I was like, what embarrassed about what? Like what would I be embarrassed about? And she was just like, no, can you be embarrassed? I was like, oh, can I be embarrassed? I guess not. I think that's a pretty important trait for a trader. 1, 2, 3, 4, 5 waves up, wave 1, and an ABC correction, wave 2 at the 78.6% fib for Shop. What's the downside level for Shop? What's the downside level for Amazon in 2009? What's the downside level for Google and Netflix in the mid 2000s? I don't know. Square Cash. I think this is a wave 1 and a wave 2. I think this is another wave 1 and another wave 2 below the 78.6% fib. It's another one, very difficult to define downside risk, especially now that we're getting away from 32. But I think this is wave 1 and wave 2. I think this is another wave 1 and another wave 2. I'm managing risk and growth with straddles and position size. But in the big picture, I expect that this sector is going to enter wave 3 of wave 3. I know that, sounds silly. I know First Solar and Enphase entering wave 3 of wave 3 was silly. I know Bitcoin and Ethereum entering wave 3 in 2020 was silly. I know all of the tech stocks entering wave 3 in 2021 was silly. I get it. It's silly. They don't always happen. All right. But this is, if Shopify, Square Cash, and PayPal, do enter wave 3, let's just make it clear, that ain't the target. 307 ain't the target. That's just for now. Here's Bitcoin. I think this is 1, 2, 3, 4, 5 waves up for Bitcoin. I think this is an ABC correction. This is getting a little interesting. We're getting close to the 78.6% fib. Oh no, we're getting close to that 78.6% fib for Bitcoin, and we don't have a low to trade against. There is proof and evidence that institutions are using straddles on Mara and BITO to manage downside risk in crypto. There is evidence they were using straddles on BITO around this 40,000 range. So while retail stops out, they get to buy shares of Bitcoin risk-free. And I do think that they're going to get to capitalize on 5 waves up, 3 waves back. I think Bitcoin's about to enter 5 waves up again in the long term. 14.8K is super close for Bitcoin. Stupidly high beta. 13.8K, 13,844. Not a bad level, but those are all both kind of arbitrary. I think Ethereum, as far as a low goes, it gets, beggars can't be choosers, unless they're at Chipotle. But I think this is 5 waves up for Ethereum, and this is an ABC correction wave 2. The length of wave A placed with wave B high appears to be where wave C ended at the 78.6% fib. I think if we zoom in, I want to say this is getting a little cute. It's a little cute. Might delete later. I think that's a wave 1 and a wave 2 from this low. So there is a little bit of a low. It's a little bit of a low for crypto bulls of 883 to be above. So above 883, I think that this is a large wave 1. This is wave 2, and we can see Ethereum enter wave 3 of wave 3.